Hello, everybody. Dan Lucas from Credo here, and I am still in Las Vegas at the AICPA Tax Planning and Tax Strategy for High Income Individuals Conference, and that's every year and it lasts a week. And it's a lot of fun. I mean, you learn a lot of new things, get away. Obviously, Las Vegas has a lot of interesting things to do. You know, as CPAs, we don't get too crazy, and we like to sleep and get up early. So I don't have any good stories for anybody. But what I can say is I'm going to fulfill my commitment to doing the 50 states in 50 days. I'm not going to miss any days. So I'm coming to you from my hotel room, and I'm on a break from a class, and so I figured I would go ahead and come up here and talk about Maine. And Maine was the 23rd state admitted to the Union, and it was admitted on March 15th, 1820. So this pretty drastic geographic change. We go from Maine all the way to, I'm sorry, we go from Alabama all the way up to Maine. So what was Maine? Is it holding out? Is it holding out for a better contract or something? I mean, all the states around it have already become, states. So I don't know. You got to watch Maine. They're kind of tricky. They have, I mean, I've been there before. I've been to Portland, all up and down the coast there. It's gorgeous. Really, really beautiful. I actually went in the ocean one time because it just looked so beautiful and it was so natural in the fall, in like October, and I will never do that again. It was very, very cold. I'm from Chicago originally, and I went to Lake Michigan, but I don't remember Lake Michigan being that cold. It was very cold. So I got out of there quickly and said I did it. It was an experience. And then we went and ate lobster, and it was only like, I think, $10 a lobster or something. It was delicious. And you don't have to go to a fancy place there. It's all over the place. So I think we actually ate at a diner, and it was fantastic. And I love it. It's beautiful there, and a lot of history there. So it's just a beautiful state. But it's just it's interesting that you jumped all the way from Alabama up to Maine. And after Maine, we start talking about Missouri, and so think about the Missouri Compromise and things like we're starting moving toward conflict, right, and then Civil War. So these states are rapidly getting admitted to the Union. So pretty cool. I mean, this is if you're from a business perspective, this is rapid growth. I mean, they're getting things done quickly, and it's not they're not adding on just like one customer or something. You're talking about entire states. So, okay, but we're not going to keep talking about history. We are going to get to the tax credits. So, there is more than lobster and cold water in Maine. So, let's look at the financial and tax incentives that they have in Maine. Now, they also have like grants and loans, like subsidies and things like that. They have like workforce training assistance programs. They have different support systems. So they have some kind of hand up stuff for businesses to get off the ground, not just in the area of giving them tax incentives and tax credits, but in other ways. So if we start looking at the tax incentives, they have something called the Pine Tree Development Zone, PTDZ, and that offers eligible businesses in Maine, of course, the chance to eliminate all of their state income taxes for up to 10 years. Okay, so you had my attention at all my tax, but you really have my attention now when you're talking about 10 years. Businesses are the ones that qualify for it are engaged in biotechnology, aquaculture and marine technology, composite materials technology, environmental technology, advanced technologies for forestry and agriculture, manufacturing, including precision manufacturing, information technology, and financial services. So not just, there's some blue collar, but definitely a lot of white collar. And biotechnology is definitely, it's a hot item, especially for, growing firms, developing new technology. So anyway, the benefits of the Pine Tree Development Zones is elimination of the sales and use tax for up to 10 years, 100% of the corporate income tax gone for 5 years, and you get a 50% credit for years 6 through 10, and then they've got some other credits in here that are per employee. So this is a massive credit. I mean, this is they're obviously trying to make this thing a sweet deal. So if you are, if you think you might qualify for this, you've got to dig into this because this is huge. Okay, let's go to the employment tax increment financing. So that is where they finance, well, they help finance like business investment projects that create at least 5 new high quality jobs in Maine. Okay, so it's incentivizing hiring and creating jobs, and you have to actually be approved in advance. So um, you definitely don't want to assume you're going to get the credit and think you've done everything to qualify for it and then apply for it later. You've got to get it approved in advance. And let's see, you can be approved up to, you can be reimbursed depending on what you qualify for. You can be reimbursed for 30%, 50%, or 75% of the state income tax withholdings from the net new payroll for up to 10 years. That's huge too. I mean, that payroll tax can really add up, especially for up to 10 years. My goodness. Um, and so it says, the amount of the actual payments based on the number of qualified employees. So, if you are, if you have a growing business and, you have 3, 4, 5 employees, maybe even growing, and you're investing in your business, you got to look at this because you may qualify for this. Definitely a possibility. They have, let's see, technology tax credits. So they have several tax credit programs that are very specifically designed to encourage tech. Obviously, other states, like Silicon Valley and stuff, they have a big handle on tech, so they're trying to get people to go technology companies there, of course. It's a huge industry, right? Huge revenue. And let's see, they will give you a research expense tax credit. And so this is all particular to technology companies. Research expense tax credit and a sales tax exemption. Now, exemptions are better than credits because that means no tax at all. Okay, so getting something for free is better than having a coupon for it, right? The research expense tax credit, that's also a federal credit, so you're getting a double dip here. So I love states that let you double dip. And let's see, you get, it's based on a percentage of the federal credit. So you have the federal credit, and then they give you like a piggyback credit on top of that. If you don't know what research and development is, it can be lots of things that you might not realize qualify. A lot of people have an idea of what they think it is and what qualifies, but the tax code can be pretty broad, and research you have to qualify for it. So you got to be careful that you don't define it yourself, but a lot of times the definition can be broader than you think. So definitely research on that. If you're investing in your business, you're growing your business, and like, hey, look, I'm doing research on this, or I know that I'm investing in this area, I got to take a look at this. Give it a shot because you never know. I've seen a lot of things qualify that the business owner definitely didn't even consider would qualify for that, and I knew they did just based on the definition in the federal code or the state code. Okay, so then we've got a business equipment tax exemption. So they have like ad valorem taxes on property. This doesn't seem like a huge credit, but let's say you've got, it looks like, I would look at things that are not office furniture, not lamps and equipment, other kinds of office equipment. I mean, they're really trying to get at more like fixed assets like inventory, construction in progress, forklifts, things like that, right? So if it's that type of business, more industrial, you're going to want to look at this credit, or this tax exemption, sorry. Let's see, they have a credit for educational opportunities. So this credit's available to employers of college graduates who earn an associate or bachelor's degree from an accredited Maine or non-Maine college or university and subsequently live and work in Maine. So you don't have to go to college in Maine. You just got to live there and work there. Let's see, it's based on loan payments made during the year. So, they're giving you a credit. You can carry forward up to 10 years on this. So if you're a college graduate and you're working in Maine, you got to look at this. From what I can see, it's probably pretty easy to qualify, but you'd have to do your own homework on your own situation. All right, they have a seed capital tax credit. I love these series, so cool, so good for a small business. And it's equal to 50% of a passive investor's long-term investment in a qualified business venture. And you get a certificate for this issued by the Finance Authority of Maine, and it reduces your Maine income tax liability for private venture capital fund investors. most private investors are not used to getting these kind of tax credits. So this is really cool. And you can also use this tax credit as a selling point and increase their ROI and let them know that they're going to get this, right? So they've got a return already baked into their investment. So that's pretty neat. I would make sure you've got this set up in advance. Let's see. It is limited to 50% of your income for the year. So the investors' total Maine income tax liability, they can only take a credit up to 50% of that income amount or their income tax amount. So they can't knock it all out. But they can carry forward any amount they can't take for 15 years. So, if you have $1 million, a lot of these people are pretty well off. They're accredited investors and whatnot. And if they can't use it on 1 year, they have 15 years to use it up. So if you have $1 million investment and you get, $250,000 credit, you might be able to use that up in 15 years. So that's really nice. If it wasn't carried forward, that would be tough. Let's see, they got New Markets Capital Investment Credit, and that is a qualified investment. It's in low-income housing, so these used to be really popular. I don't see as much of them now, but they still have them there. So any investment you make in a low-income community, and there's a lot of real estate partnerships and whatnot. Sometimes master limited partnerships qualify for this. So if you know what that is, I want to take a look at this as well. Let's see. They've got and one other thing, they've got sales tax exemptions, and sales tax is a big source of revenue, and it can really that tax bill can add up big time, especially in industries where the dollar amounts are just big, right? In construction, manufacturing, things like that. But they have exemptions in the state of Maine for things in different areas. So one of the areas is biotech, and it's for sales of machinery, equipment, instruments, and supplies used by the purchaser directly and primarily in a biotechnology application. They have custom computer programming is another bucket that they have, and I'm not really exactly sure what the definition of that is. I'm sure that if you do, you probably qualify. There is an exemption on fuel and electricity. That's not atypical. I see that in a lot of states. And it exempts 95% of the sale price of all fuel and electricity. So they're basically saying you got to pay a little bit, but they're knocking most of it out. In the manufacturing area, sales of machinery and equipment used by the purchaser directly and primarily in their business gets a sales tax exemption. There's not a lot of detail in the document I'm looking at. It could be more, but if you're in manufacturing, you want to look at this. There is a sales tax exemption for, research and development for machinery and equipment used by directly or exclusively for research and development, right? So again, they're going to let you, if you're using it for research and development, they are going to reward you for that. Let's see. And that's about it. So, it's not, and they have a lot of grants and other things going on. That's kind of beyond what I want to talk about in this series, unless, there's a few things that are connected to the tax credits, but they have a lot of great programs for small businesses. Tax credits are just part of them. It's just that tax credits always seem to get forgotten or always seem to fly under the radar. People know if there's, typically know if there's funding programs or ways to get loans because, they have to decide between going to a bank or going and getting some subsidized, loan money from the state. And most people know about it, but most people don't know about tax credits. And a lot of even tax professionals have a hard time trying to discern whether or not you qualify for it. So again, if there's anything I said in there that, sounded familiar to you or you think you might qualify for, look into it. Or give us a comment, give us a question, put it in the comment section in the video, send us an email, give us a call. We'll do specific research for your situation. If we can help you, either myself or my team will. Or if you know anything about any of the tax credits that I've talked about or the exemptions, please add to it, supplement it. If there's something that I maybe said incorrectly, feel free to say something there. I mean, God knows I'm not perfect, and I don't get it right 100% of the time. So I just want to help people and get this out there, and that's my goal. So if you know something I don't, please post it on here, and we can circulate this content around to people in Maine that can use it and get money that they're entitled to, that they don't know about. So anyway, that is it for Maine, and thank you for watching. And again, I will hold good to my promise to never go in the ocean up there again. And like I said, I've been in Lake Michigan. That's cold too, but man, it was cold. I still remember that. And my wife thought it was crazy, and she's kind of right. So anyway, thank you so much, and I will see you tomorrow.